Good morning and welcome to the World First Weekly Report for today, the 21st of April. Well, over the last week we've seen inflationary pressures putting the Aussie dollar back in vogue. We had some higher than expected inflationary figures out over the last week. We had consumer price expectation, import price index and export price index all higher than expected, which is prompting speculation that the RBA will raise interest rates earlier than expected. In China, there were also some higher figures, better than expected figures, with both industrial production and GDP posting strong gains, and as a result we've seen the Aussie dollar rally over the last week and currently, or overnight, hit the $7 level. In the States, we've seen some better than expected housing data. This is really suggesting that there's a bit of a turnaround in the States with regards to their fragile housing market. Over the last week we had some better than expected existing home sales and new housing starts out, and as a result equity markets rallied. Furthermore, equity markets were also up off the back of earnings season. Over the last week we've had some good figures out from companies like Apple and L'Oreal, and as a result overnight we saw the S&P 500 rally 1.35%. The downside currently going around on the global markets was seen on Monday evening when we saw the S&P, the rating agency, downgrade the long-term credit position to negative for US credits. This was quite a surprising move and can be referred to as a bit of a shot across the bow on Capitol Hill, given that there's a lot of budgetary measures being put in place for debt and deficits. And the shock move was highlighted with a statement saying that there was material risk that US policy measures might not reach an agreement on how to address medium-term, long-term budgetary measures by 2013. So you could say that they're acknowledging the US recovery but not necessarily accepting it. If you'd like an update on the market or if you'd like to book a trade, don't hesitate to get in touch. Enjoy your day.